Hey Money Magnet, you want me to cover some futures for you? Maybe some NASDAQ 100? You do? That sounds great. I'd love to cover it for you. We're looking at the daily chart of S&P 500 E-mini futures right now, and yesterday's video I spoke about the 6140 level, if you recall, and you can see that we had a doji in yesterday's price action. Very choppy, didn't go anywhere, but as of right now we're getting a bit of price action continuation, well, bullish price action continuation. You can see in the context of the chart on Tuesday's candle we cleared multiple levels, including the 1.618 fib level, which is at 6140 right there. And yesterday, despite having the choppy price action, it never broke back below the 6140 level. So ultimately it held the breakout. The breakout stayed intact. Now there was definitely still a chance for some type of evening star pattern to play out where the third candle ends up being bearish. But I would have only believed that to be bearish if the 6140 level failed, and of course the low of the doji. As you can see in the context of what's happening right now, it's not bearish. 6140 held. The bulls successfully kept the breakout intact, and now we are popping up to more upside. So yesterday's plan was to stay bullish above 6140 and expect more upside. Took a little bit of time, but eventually it's moving on up now. I had a target, this blue trend line. This is a more macro level I have here. It's around 6160, and then I have the next Fibonacci level at 6180. I'm gonna round it to 6180. So right now, as of recording this, futures is above the 6160 level. If they can continue to stay above that level, I do expect that my next target around the 6180 level to be hit. And if 6180 clears, I don't really have any levels on future until 6230, which is a big move to the upside. So for this to cancel out, we have to look at the range of the doji. I do have a level at 6160, but to really be sure if we should be bearish or not, we need to look at the range of the doji. And it just so happens that the top of the high of the doji is also at 6160. So we have multiple reasons why that level is important here. So if we are to get bearish, we want to see 6160 fail as support, drop back below the high of the doji, and then also break down 6140 and take out the low of the doji at 6130. So three support levels that I have for futures: 6160, 6140, and 6130. The bears would need to take out all three levels for me to trust that it's going to be bearish. But as of right now, I'm going to continue to lean bullish. We're breaking out this wedge that I have here, this structure. We're breaking out. 6140 held. We clearing 6160. So as long as above 6160, I do believe we can go hit 6180. And if that clears, like I said, 6230 is above. So I gave you the bullish case scenario on what we can do when the price goes up higher, and I gave you the bearish case scenario what we can do if the price goes lower. So when you start to trade, make sure you try to do your best to stay unbiased as you can and follow the price action. I like to use the 15-minute chart. Using these levels, I use the 15-minute chart. So when it breaks or close below, we want to look to short. But if it continues to hold above breakout level or clear the next resistance, we want to look to long, or in other words, bet to the upside. So we're going to move on now to the NASDAQ. NASDAQ, I had a similar situation with the NASDAQ. I mentioned the 22,397 level. As long as above it, we can go hit the top of this wedge. And as you can see, it came true. Very nice. I'm grateful for that. Now, resistant at this wedge right now is at 22,575. I'm going to round it to 22,575. If bulls want more upside, they will have to clear that 22,575 level, and we'll likely head up to 22,700, 22,700, 23,000, and possibly up to 23,600 plus. That's a pretty big move to the upside, but for it to be possible, like I said, the price needs to clear that 22,575 target. Now, we are at resistance, which means there is a possibility that the market makers can push price back down. We don't know for sure that they will do that. So I would need evidence of price being pushed down, and that would come in the form of a false breakout setup. So what's a false breakout setup? It's when we clear a resistant level. In this case, if we look at the Tuesday's candle, we cleared that 2297 level. So for me to see a false breakout and trust the rejection, I need to see 22,397 fail as support. If it fails, that's a false breakout setup. It'll break down a critical support, which makes me trust the strength of the rejection from resistance. If it's truly strong, it'll break down support. If there's no strength behind it, it won't be able to break down the support, and therefore it's not worth going short. So if it can break down support, I would definitely go short. Break down 22,397. I would favor we go hit 22,218, 22,078, and 21,980. Possibly lower than that, but those are the closest targets I have to the downside. But like I said, if 22,575 clears, then I would expect more upside. I wouldn't argue with the price action. Next thing is crude oils. Crude oils. Now, I wanted to cover crude oils because, you know, I've seen some of my Discord members mention crude oils that we should cover it. And I like to think like a lot of my Discord members, they're my co-creators. I listen to a lot of things they write and say. And, you know, I do try to incorporate a lot of their ideas into my videos because I think it's good stuff, and it's important that I try to get my viewers involved and my supporters involved, especially when they're great ideas. So I definitely agree that crude oil was definitely worth looking at, but unfortunately right now we can see that volatility has dropped significantly on crude oil. Does this mean it's not tradable anymore? It definitely does not mean that. It's definitely potential, a lot more potential for movement when it comes to this. It's just, I like to call it the chop phase. The thing with the stock market, it has different phases, the chop phase and then the trend phase. In other words, there's the contraction and then there's the expansion, and then expansion leads to contraction, contraction leads to expansion, right? So it's going to get big, sometime it'll get smaller, but the small price action will eventually lead to those big candles again. Right now we're in the contraction phase. It's contracting. When that happens, we will have to identify the chop range, allow it to build the structure, if you will, and break out or break down that structure. And the levels that I have right now, I'm looking at these candles. You see that it's within the range of Tuesday's candle. As you can see, the range of Tuesday's candle is the low of 64 all the way up to 67.8. So that to me right there is the chop range, 64 up to 67.8 with 66 as the middle level. So if we are to be bullish and we want to end this chop bullishly, I need to see 66 clear, and I also need to see 67.8 clear. If those two levels can clear, I would be bullish and favor we go to 71 plus. But for this chop range to end bearishly with possibly volume and volatility returning, I need to see 64 fail as support. Take out the low of this candle and I would favor a lot more downside. Possibly drop down to 62.5, 61. I have support at 59 and 57 below as well. Does that make sense? And then last but not least, we're going to take a look at gold's future. I think I'm covering a different one from last time, but I do have some updated levels. A support that I am watching right now is at 97,186. That is a fib level. We can also see that we have two candles within the range of Tuesday's candle. So bit of choppiness going on here. So for the chop to end bearishly, the first level that must fail is 97,186. If that fib level can fail, because right now it's showcasing some buying pressure, not any strong buying pressure, but there's something alive down there. But if it can fail, it'll show me that all those buying orders and buying pressure is gone, and that would put the low of Tuesday's candle in play, which is at 96,422. If the price action or the price can break down those levels, 97,186 and 96,422, that would indicate to me that it wants to go down lower. And if I'm getting the indicator or the indication that price wants to go down lower, that makes sense to bet to the downside with a proper stop loss. But if price fails to break down 97,186 and manages to recapture and clear 98,674 and 100, I would definitely be bullish on gold futures. Let's do this and keep it simple. I hope you enjoyed it. I really do. I hope you got some value and learned something from it. And I have to tell you, I have fun making this video for you. It's a dream come true to be able to have this moment with you. So thank you for being here. I love y'all. Love you. Peace.